Hello, everyone, and welcome to our conversation today on social investment for people, planet, and prosperity, organized by the Council of Europe Development Bank. I'm Shada Islam, and it's my pleasure and my privilege to navigate with you through this exciting 60 minutes or so of a panel discussion, video clips, and also announcements of partnerships and networking. Now, just a few words to set the scene for this very important conversation. COVID-19, this pandemic, has disrupted our lives in so many different ways. And one thing that it has done is reveal stark fragilities and inequalities in our economies and in our social systems. No surprises there. There's been a lot of underinvestment in social infrastructure over the years. And this has, of course, made it vulnerable to external and internal risks and disruptions. Now, if we're going to build back better, as we say we're going to do, and if we're going to have a sustainable, green and inclusive recovery, then we will have to do things differently. And one of the things we'll have to do differently is we'll have to invest more in social infrastructure. So this panel discussion that I'm going to kick off in a few seconds is going to focus on the ways in which we can do this. We have 4 very brilliant panelists with us for this first conversation, and we will have 5 interventions later on by stakeholders talking about the same thing and looking ahead to this inclusive recovery that we all are aspiring and working towards. On our panel today, we have Rosa Maria Sanchez Yebra Alonso. She's Vice Governor of the Social Development Strategy from the Council of Europe Development Bank. Hello, Rosa, you're joining us from Paris, I believe. It's wonderful to see you. We also have with us Dr. Agnes Suka, Director of Health Systems from the Governance and Financing section of the World Health Organization, joining us from Geneva. Hello, Agnes. Lamia Kamal Shawi, she's Director, Center for Entrepreneurship for Small and Medium-Sized Enterprises, Regions and Cities at the OECD, joining us also from Paris. Hello, Lamia. And last but not least, joining us from Toronto, I think, is David Miller. He's Director for International Diplomacy at C40, the Climate Change Cities Network, and of course, the former mayor of Toronto. And as I said, there are also 5 other people joining us, and I will introduce them to you as we go along. We do have time, I hope, I really hope, for questions. So please, if you have questions, prepare them, and I'll try and take them on. Now, without further ado, let me turn to you, David. And the question for all 4 of you actually is, what is the role of social investments, investments in social infrastructure in shaping this post-COVID-19 recovery? What lessons have we really learned after these months and months of lockdowns and very disrupted lives? David, let me start off with you. Your 3 or 4 minutes, please.
Thank you very much, and thank you for the introduction and the opportunity to be part of this very distinguished panel. From the perspective of global cities, and C40 today represents 97 of the largest cities in the world, the COVID pandemic, of course, has profoundly impacted our cities, particularly the most vulnerable and disadvantaged citizens, as you mentioned, Shada. It's not just a global health crisis, of course, but it's also a social and economic crisis whose impact will be felt for years to come. Our cities are investing today in green and just recovery through a variety of measures to ensure that they prevent the climate crisis from worsening, address the climate crisis, and address the social and economic injustices that we have seen from COVID. In order to ensure that vulnerable groups do not pay a heavy price in the recovery and that their needs are met, we must increase social investment, particularly in infrastructure, to generate economic and employment benefits, foster social inclusion, and strengthen social resilience. Mayors, of course, are on the front line of the COVID crisis as it continues to unfold. And to this end, they recognize that adequate financial resources are critical in order to create stronger and fairer economies that serve everyone. Finance and investments in the form of green stimulus, national government investments, or recovery funds from national governments or international institutions are essential and must be directed at the following actions from our perspective. The only stimulus should be a green stimulus, and that's essential because our research shows if it's not, the world won't be capable of meeting the Paris Climate Accord goals. Support needs to go directly to sustainable cities, to invest in resilient cities as engines of the recovery. We must commit to an equitable and inclusive recovery, protect and champion mass transit, which is particularly important on equity grounds, prioritize and invest in clean energy, and end public investments in fossil fuels and fossil fuel infrastructure, including through development banks. Our research suggests that if we make investments of that kind quickly and immediately with a view to promoting an accelerated green and just recovery, there are significant benefits. Over 50 million good sustainable jobs by 2025 across the nearly 100 cities in the C40 network, of course, more globally, over a third more jobs than investing in a high carbon recovery. We would save lives by reducing air pollution, which could prevent over 270,000 premature deaths in the same cities, lead to over 1.4 billion of savings in health costs or avoided hospital admissions, and wider economic benefits of significant amounts in the range of $300 billion. In addition, that kind of investment could put us on a path to more than halving greenhouse gas emissions by 2030. And it's critical to invest in cities in order to ensure that we don't just address the COVID crisis, we address injustice, we produce equitable outcomes, and we help prevent the climate crisis, which of course is working in the background. I think those are the points I'd like to make on this intervention. Sada, back to you.
Thank you very much indeed, David. And I'm sure we'll pick up on many of the issues you've talked about. Very, very important to talk about the green stimulus and sustainable cities, and also the need to have really frontline focus on cities, as you said, David. This is going to be something, a message I think that we absolutely need to hear. Let's, the same question really to you, Lanya, from the OECD's perspective. How do you see this going forward?
Yes, good afternoon, everybody. To answer your question, Shada, we have first to acknowledge that this pandemic has exposed many of our weaknesses as a society. It has made, I would say, intolerable what we used to tolerate: social exclusion, homelessness, rising inequalities, including in access to housing or to critical services like health and education. This is the result of chronic underinvestment in social infrastructure, and we are paying the price today. What I'm saying is that social investment needs were already huge before the crisis. Because of the economic recession in the aftermath of the 2008 crisis and the kind of austerity measures that followed. And because of significant demographic changes like increased urbanization or increased life expectancy that really put a stress on spending for social infrastructure. Now, the stress of the coronavirus is revealing the cracks in our health system and in our social and community infrastructure that has suffered from this underinvestment. But this crisis can also be an opportunity, you mentioned that, Shada, to reboot. With more buy-in from the society, we are seeing that government should invest more in social infrastructure as part of their recovery strategies. At the OECD, we pay a particular attention to the role of regional and local government, while we're working very closely with cities, with mayors, including David Miller's, with long-standing friends. And we know that cities and regions, they are key players, but we tend to forget it. Across the OECD, they are in charge, on average, of almost 60% of overall public investment. Across the world, it's around 40%. And in most OECD countries, social infrastructure investment is largely the responsibility of regional and local authorities. Of course, subnational governments are best placed to make social infrastructure investment tailored to the needs of their regions and their city. These needs are not the same or of the same magnitude everywhere. For instance, let's take access to health. Across the OECD, the number of available hospital beds per 1,000 inhabitants varies from less than 2 in some regions to more than 7 beds in others. Shada, you asked us what has COVID taught us. My short answer is geography matters more than ever. If you want to revive social infrastructure investment as part of our recovery effort, we should go local. It's by going local that we can design place-based infrastructure investment strategies, seek complementarities, and reduce the potential trade-offs between social, economic, and environmental objectives. It's at the local level that we can target investment in social housing and improve living conditions that benefit vulnerable groups. It's also at the local level that we can rethink the type of social infrastructure investment we need in cities to fit new ways of living and working. In large cities, for instance, this means moving from a logic of mobility to one of accessibility to basic amenities and services. But of course, local governments cannot do it alone. They have to work hand in hand with central governments.
Thank you very much, Lamia. So two very strong messages going in the same line, if you like. Go local, the importance of cities. And as you said, from mobility, I thought that was very interesting, to accessibility as becoming the key issue, and obviously partnerships, national governments working with subnational entities as well. Thank you very much. Strong messages indeed. Agnes Suka from the World Health Organization, your 3 minutes, please. The same question for you as well. What lessons have we learned and where do we go now?
Well, thank you very much. At the end of 2019, just before the COVID-19 pandemic hit, the world was on a positive trajectory towards the SDGs. According to the 2019 WHO UHC Global Monitoring Report, the world was spending 10% of global GDP on health, spending about 7.5 trillion on health. So we are talking about the health sector as a driver of economic development, with a much steeper growth of the health sector over the last 15 years than the rest of the economy. The health sector grew per annum on average at 4% against 2.8% generally for the overall economy. This is a perspective that is perfectly understood by our host, the Council of Europe Development Bank, which work put at the forefront of the investment in social infrastructure. Back in 2017, our WHO analytics made the case for more and better investment in social infrastructure. When we actually looked at the objective of reaching the SDG health goal, which is SDG 3, the price tag was estimated to be about $300 billion per year for 10 years to ensure access to the remaining 70% of the world's poorest populations who don't have full access yet. The first cost driver of this investment was, without surprise, the health workforce, 36%, immediately followed by the infrastructure, 34% of the total investment required. This is what is necessary to make services acceptable. What was the end game? Saving 97 million lives, as well as triggering more than 500 million healthy years of life across the globe. But not only that, and as highlighted by previous speakers, social contracts that are established around universal health coverage bring social cohesion in societies and contribute to economic growth and stability. Investing in health is preventing the potential and now real massive economic consequences observed in this crisis. We had a true blind spot globally when we ignore the signals that markets were indeed globalized, but investments in common goods for health, investment in redressing market failures at global level were not following pace. We still lack an organized, coherent framework to invest to redress those market failures and address the equity issues that are left pending despite the economic growth and poverty reduction that was triggered by economic globalization. With climate change and environmental degradation bringing further threats to health globally, this might be the first of many future crises. So yes, this crisis highlighted the lack of investments made in the social sectors, particularly health, but more than that, highlighted the lack of investments in common goods for health, public goods, and functions with large market failures, such as regulation, communication, coordination, and investments in public health programs, and the essential public health functions such as surveillance and laboratory services that were underinvested in. Mm-hmm. Yet, when we delve into the private investment in social infrastructure, we see that it plummeted from 19 billion in 2010 to 3 billion in 2019. We thought, wrongly so, that only private sector investment would do the trick. It proved not to be true. We need a guidance from the public investments to build an even stronger case for more and better public investments in those infrastructure. Moreover, our Global Health Financing Report showcased year after year the importance of development aid for low-income countries. Yet, paradoxically, it represents a lesser, decreasing part of total health expenditures, while still being vital for those countries who heavily rely on it for their sustainable development. So filling the infrastructure gap is paramount to achieving the SDGs at a time when the clock chimes louder than ever. 2020 will certainly end up hindering many efforts on the road to universal health coverage. We already observe some signs of coverage reverting back to pre-2015 levels. There is no time to spare, or we are going to lose the progress that we have made over the past decades. It's time to reinvest in the social sectors and emphasize the role of the public purse in steering those investments.
Mm. Thank you very much. And indeed, a very strong message. We haven't invested enough in social sector, especially health, and we haven't looked at health as a global common good, a public common good, which obviously we need to do that now. And I think that's a very strong message as we go ahead. I hope governments are listening, and more than that, I hope the banks are listening as well. So thank you very much indeed, Agnes. Rosa Maria, from the Council of Europe Development Bank, from your point of view, what needs to be done? What are the lessons we've learned?
Thank you very much. Good afternoon. I'm delighted to share this panel with these experts. Allow me first mention that the CB has responded in a record time to this crisis, adapting its instruments and procedures to approve COVID-related loans in worth 3.6 billion euros, which is an extraordinary effort for our bank compared to a total volume of loans approved in a normal year of 4 billion euros. The crisis, of course, I agree with other experts that has shown the fragility of the economic model, that has widened inequalities, and that has fallen short of providing access to quality social service, in particular for the most vulnerable population, undermining social cohesion. The lack of resilience of the social services in general, I concur with Lamia, highlights the chronic underinvestment in social infrastructure. As a financial institution with a social mandate, the CEB devotes 80% of its portfolio to social infrastructure projects and 20% to support business activity and jobs through financing micro and small and medium-sized companies. The CB experience, being a project bank, shows that an integrated approach to social infrastructure can deliver simultaneously environmental, social, and economic benefits. I just mentioned some examples. Investing in the energy efficiency, for example, the renovation of and expansion of the building stock, particularly for social housing and the most vulnerable population, will have a positive impact on health, on their standards of living, on their household income. Also, it will create job opportunities and will, of course, reduce greenhouse emissions. Another example could be investment in the water and sanitation sector. For example, the rehabilitation of the water supplies and waste treatment plants, of course, will reduce water losses, will improve the quality of drinking water, will broaden the coverage to water supply services, and will have also a positive impact on the environment. Another example will be in education, investing in education. Here we have seen that the best results can be achieved combining investment in socially inclusive, green and resilient schools with other measures directed to improve the equipment and also e-learning skills. Because we have seen in the pandemic that some schools couldn't provide adequate services because adequate equipment and also the lack of e-learning skills, both in teachers and pupils. These are just some examples of our experience, but a broad and comprehensive detailed experience of the CB in investing in social, inclusive and resilient social infrastructure could be accessible in a technical brief we just published, and it's accessible on our website. In a nutshell, from our perspective, addressing the critical gaps in social infrastructure will ensure equitable access to affordable, high quality and essential services for all, and remains the most effective way to enhance social cohesion and social integration. At the same time, integrating the social and environmental dimension, environmental sustainability dimension in all the projects will increase society's growth prospects, their resilience to shocks, and also it will ensure a just transition. It will also support countries' efforts to achieve the SDGs and the green objectives. We think that SDGs and the green objectives are the right roadmap for sustainable development, and they should be integrated in the strategic and operational frameworks of PDBs. At the CEB, we have already identified 10 key SDGs that are more relevant to our mandate, and we have included them in our operational activity so that we will be able to assess our contribution to attaining these SDGs from a project appraisal phase and also at the portfolio level. So for the time being, this will be my remarks. Thank you very much, Alex.
Thank you very much. Now I have a second round of questions, and I'll start with David, who came in first. So we know what we have to do. I mean, all four of you have set out very, I think, practical but ambitious agendas. Obviously, what's come out also very strongly from all four of you is the need to work local, to be local, and cities are in the front line. But my question to you would be, we need money for this, obviously, and public development banks have a big role to play, but generally the interaction tends to be with the state level. Now we're talking about cities and the subnational level. So what is the role of finance and PDBs, public development banks, when it comes to the subnational level? How do you interact there, and what are the kinds of objectives and goals that you'll be working with, and what are the kind of assistance, practical assistance that you need from them? David, let's kick off with you again.
Thanks very much, Shada. This discussion is quite interesting. I think from the perspective of cities, the first thing is an acknowledgement that cities themselves are investing in this way. And I think it's important to recognize their leadership. For example, Seoul, Korea has a very significant program to help do energy retrofits of apartment buildings and use that as a job creation strategy, therefore meeting a whole variety of goals, including lowering the operating costs of buildings in places where energy poverty is an issue, jobs and the environment and so forth. Having said that, there's a very significant and important role for a development bank in particular to build on a few good examples of direct city access to finance. And I'd like to speak to one aspect of that from the perspective of mayors and cities, because for cities, accessing finance dispersed by global institutions and national governments does remain extremely difficult. And there are a number of ways that we might address this. In that context, I'm delighted to introduce a new report by C40 that provides a step-by-step guide for cities on how and why cities can launch their own local green bank, a move that helps leverage financing for a green and just COVID recovery and supports the health and safety of citizens and investments in equity for decades to come. The report speaks to what cities have done so far, and the role of development banks and national governments could be instrumental in helping to catalyze these local financial tools.
Right. Thank you.
So far, thank you.
Thank you, David. Didn't mean to cut you short, but we are running short of time, and I would appeal to the three ladies as well when they come into this specific question to be very, very short, because we have a packed agenda, and I'd like to take a few questions if I can from the floor. So let me turn to you now, Lamia. From your perspective, direct interaction with cities, subnational level, in a minute, please. Where would you put the priority?
Well, as we look for ways to rebuild our economy and to repair some of the damages caused by the crisis, short-term measures or quick fixes won't be enough. We really need to seek long-term solution. And again, we should count on local and regional government to make this happen. At the OECD, we have been tracking the action of subnational governments since the beginning of the pandemic, and we saw that they have been on the front line. They have been the essential workers, and many are even preparing now for the recovery post-COVID. And for most of them, their strategy is to go green, to go inclusive, and to be more resilient. But the question is funding, as you mentioned. They have the knowledge, subnational government have the knowledge, they have the potential. They are the ones that can generate new innovation in those critical areas of social infrastructure, but they are severely curtailed due to the stress on local public finance.
Absolutely.
And our unique international database on subnational data, we have been tracking the impact of the pandemic on local public finance, and we have seen a strong decrease in revenues, a strong increase in expenditures. So the context is very tight for them. Clearly, there is a need and support from the development bank, and you, the CB, and the other public development banks, you can really play an important role to finance this structural transformation. You can advance important investments in areas that private sector would consider non-profitable.
Absolutely.
Social housing, education, health, investment, and digital literacy.
Absolutely. Thank you. Thank you very much indeed. Moving on, Agnes from the WHO.
Yes, I would very much support Lamia's way forward. First and foremost, and this is the message that we've been giving together with the OECD and with the World Bank as WHO, is we need to revisit the investments in public goods and common goods. We have estimated that globally the gap could be about 100 billion per year for 3 to 5 years to get those common good functions, the surveillance, the data, the laboratories, the regulation, the coordination, the information, all these essential public health functions at a level that would allow us to prevent future crises as well as handle potential crises that would develop much better than we handled COVID-19. The question is really how to reverse those investments, right?
Okay.
And that should be really the step zero of investments, is to invest in those functions and make sure that it's not only happening at national level, but also indeed at local level, at decentralized level.
Right. Thank you. Thank you very much, Agnes. Maria Rosa, very, very quickly, because we have to move on. Very quickly, CEB with subnational level. 30 seconds, please.
Yes, of course. Well, I would like Yeah, I will make three points. First of all, PDBs have an important role to play in filling the gap of the financial needs of local authorities, since there has been a decentralization of the provision of public services to the local level, but this has not been accompanied with a stable financial framework. So, of course, this is a very important role to play. As a matter of fact, our portfolio has been shifted to a more local approach, and now local projects account for 1/3 of our total activity. Okay. And only last year it has increased by 15%. Additionally, to this filling financial gap, PDBs have an important role providing technical assistance for the development of resilient, inclusive, and sustainable cities. Since this is a very demanding exercise, it implies very sophisticated urban development techniques and territorial planning. So PDBs can help there with technical assistance. And then my final point would be that PDBs have had and are having, and CB in particular, an important role, a pioneer leadership in the development of the sustainable financial market. For example, CB is a regular issuer of social inclusion bonds, and we use the proceeds of the allocation of these bonds to the health, social housing, small and medium-sized companies, and for education. So this is a way to crowd in private funds, private sector, private investment to projects with a high content, with a high value from the point of view of the social impact and also environmental impact, most of them at the local level that otherwise will not be possible.
Right. Thank you. Thank you very much indeed. Sorry to rush you all through some very interesting points you've made, but this conversation, as you know, is not going to finish here. It's an ongoing one. So let me turn now to some videos that we're going to show. First of all, we have Guy Ryder, Director General from the International Labour Organization, and he's going to talk also about the impact of COVID on the most vulnerable people on a global level. And then we're delighted to have with us Matt Reed. He's Director for Institutional Partnerships at the Aga Khan Foundation and CEO of the Aga Khan Foundation, UK. So long-term investments in health and social infrastructure, also from the point of view of local communities. Could we have the videos, please?
Ladies and gentlemen, even before COVID-19, more than half the world's population had no access to social protection at all. And in Africa, it's more than 80%. So it is no surprise that many countries were ill-prepared to face a health, economic and social crisis of the current unparalleled dimensions. The only conclusion is that we must now build universal and comprehensive social protection systems that can make the right to social protection a reality for all, as called for by the UN 2030 Agenda, by ILO Convention number 102, on social security, and by ILO recommendation 202 on social protection floors. But the global financing gap in social protection has increased by 30% since the onset of COVID-19. Developing countries would now need to invest about 4% more of their GDP to close their annual financing and coverage gaps. And for low-income countries, the additional resources would be 16% more. This simply underlines the urgency of action. While domestic resources must remain the cornerstone of national social protection and need to be mobilized in an equitable manner, for low-income countries, international assistance is also critical. And we have to counter the dangers of growing poverty, inequality, joblessness, and social exclusion that stand to persist even when the COVID-19 crisis subsides. It is essential that countries have the resources to sustain their social investment so that people have the social protection that they need. International cooperation and solidarity has never been more important.
Hi, I'm Matt Reed, Global Director of Institutional Partnerships at the Aga Khan Foundation and CEO here in London. And it is my pleasure to represent the Aga Khan Development Network at this Finance in Common Summit. AKDN has been investing in social infrastructure and institutions for over a century. Our network began by building schools and health clinics, by creating rural credit and insurance associations, among many other things. helping communities be ready to help each other in times of crisis. During that time, we partnered extensively with public development banks of all kinds. The Agence Française de Développement is one, but also national institutions like India's National Bank for Agriculture and Development, among many others. As a result of these long-term investments in social infrastructure and capacity, AKDN was ready to respond quickly to the COVID pandemic, mobilizing over 60,000 community organizations to promote awareness and prevention, and responding through treatment and testing in over 750 health facilities, as well as advising national governments, among many other activities. And so as we now think about building back better, AKDN fully endorses the conclusions of this Finance in Common Summit, which is that we need a green recovery. Building back must be done in a way that can help save the planet. At the same time, we stress another vital lesson. Fundamental investments in health and social systems are critical. To be ready for the next pandemic, the next economic crisis, we must build strong foundations, strong social institutions that can help countries weather these storms. As AKDN has learned, this social investment is not just about buildings and facilities, it is also about people. And so we urge public development banks to work creatively in providing flexible concessional finance for affordable health insurance schemes, affordable student loan products, and the social safety nets needed to support people in need. And so thank you again for this opportunity. We look forward to this important discussion of the crucial role that public development banks have in this recovery and in preparing for the next one. And we look forward to continuing our partnerships with so many of you as we support the development priorities of the countries and communities that we serve together. Thanks very much.
So important messages there from Matt Reed and Guy Ryder from the ILO, basically saying prevention is better than cure and prepare for a strong economic recovery, but which is also green, sustainable, and inclusive, a message that we've been hammering home throughout this panel discussion. Now, one of the key objectives of the Finance in Common Summit is to actively promote networks among public development banks and between public development banks and authorities, key stakeholders, and we have talked in length about cities and subnational cooperation. So we're going to hear from the following institutions, and I will name them for you. The European Long-Term Investors Association, also known as ELTI, and we'll be hearing from Lauren Zilberg, who is the chairman. We then go back to the OECD and our panelist, Lamia. And then we have Dr. Tedros from the WHO, Director General, very well known. And we'll hear also from Dr. Suka, who is on our panel. And finally, again, from Rosa Sanchez, who is also on our panel. So once again, could I ask the videos to be played, please?
Thank you for inviting ELTI, European Long-Term Investors Association, for this important event. If there is only one thing that we should learn from the current crisis, it's the crucial role of social infrastructure for cementing sustainable societies. ELTI's members, and among them CEB and Caisse de Dépôt, we did not wait the depressing time that we endure for focusing on social infrastructures. 2 years ago, we asked Romano Prodi and the former French Finance Minister Christian Sauter to lead a task force about financing social infrastructure. This report made lots of proposals and gave us major lessons. Because social infrastructure brings positive externalities like well-being, cooperation via transport, etc., they are key pillars of our communities. Those positive externalities are higher if projects are the result of a bottom-up process. Therefore, local actors should be involved in the process from the very beginning. On financial aspects, it's clear that the vast needs cannot be met only by grants or even by loans. Equity is needed with sustainable business model, which could include subsidies. Most of the time, social infrastructure projects benefit from a public robust guarantee. Thus, even if the yield is low, they represent solid assets for public or private investors. Since the crisis of 2007-2008, public finance role has been positively reviewed. As you know, LT is the association of the European national public banks and financial institutions. We are economic counter-cyclical actors. You can easily imagine how much solicited we are at time being. Our role is to mobilize financing by leveraging with other financial actors. We bring confidence and robustness, key elements for projects like social infrastructure. Let's be sure that you can count on us for your projects. Financing Common Summit and today's event are major steps. Financing social infrastructure is an important challenge, but we have to tackle it if we want to reach the sustainable development goals we are all aiming for. Thank you very much, and I hope to see you very soon.
Dear all, the COVID-19 crisis is shedding a stark light on our collective sins as a society, exacerbating inequalities across people, places, and firms. As governments are progressively focusing their attention on recovery strategies, social investment must play a key role toward a future that is more resilient, more inclusive, and more sustainable. To make it happen, our efforts need to go local, because the scale of the downturn and the path to recovery look different across regions and cities. And we must count on mayors, local and regional leaders who have been the essential workers during the lockdown. Clearly, their capacities could make or break our response to the crisis and the recovery. At the OECD, we help local and regional governments to enhance well-being and living standards in all places. We do so often in partnership with public development banks, which are crucial actors for an effective implementation of policies. We are proud to have the Council of Europe Development Bank, the CEB, as a key partner in the OECD UCLG World Observatory on Subnational Government Finance and Investment. The World Observatory is the leading source of internationally comparable data and analysis on subnational government structure and finance, collecting data from more than 100 countries. An initiative that has proved to be particularly valuable in the current context of the COVID-19 crisis, as we have now the tools to assess its impact on subnational government finance. The CEB has put social investment at the core of its agenda. It echoes the OECD mandate on people's well-being and inclusive growth. Therefore, there are many opportunities to develop new partnerships with the CEB, building on its history of providing technical assistance and support to local governments. The OECD would be happy to join forces with the CEB to develop an inclusive growth assessment framework that could help the OECD champion mayors for inclusive growth and other cities working closely with the CEB and the OECD to track and monitor their effort in their fight against inequality. There is also great potential to further engage with the CEB on work regarding migrant and refugee integration at the local level. Working together would help scale up our respective efforts. Ladies and gentlemen, the OECD is delighted to be part of the new and bold global community that is driven to take action. We need to work in common to make these commitments and our wider goals a reality. For that, you can count on the OECD. Thank you.
Mr. Remy Riou, Excellencies, dear colleagues and friends. It's an honor to speak with you today. And my thanks to the World Federation of Development Finance Institutions, the International Development Finance Club, and the French Development Agency, AFD, for hosting this important discussion. We meet today at a pivotal moment. The COVID-19 pandemic has provided irrefutable evidence of the need to better prepare for health emergencies and for strong health systems that can underpin our response. This must work in lockstep with systems that bolster economic and social growth for the good of all. In order to facilitate investment in social infrastructure, particularly for low and middle income countries, development institutions are coming together to pool their comparative strengths. WHO has set up the Decide Health Decision Hub to help decision makers achieve best value for money in their capital investments in health infrastructure by offering access to data, analytics, and knowledge. I encourage you all to join the Decide Hub and to work together to strengthen health systems and support countries on their journey towards universal health coverage. In so doing, you will create hope for people around the world who need to access to care. With your support, we can build a healthier, safer, fairer world for everyone, everywhere. I thank you.
Dr. Suka. Dr. Suka, you are going to give us a little bit of information on Decide?
Yes, Decide is the global network for value for money in health. It promotes evidence-based decisions through collaboration across the entire ecosystem that finances health investments. The network engages its member organization, amongst which the Council of Europe Development Bank, WHO, the World Bank, regional development banks, but also the European Hospital and Healthcare Federation, or the Bill and Melinda Gates Foundation, for instance. Decide members and partners include all relevant segments of industry to work together on operational solutions in the field of capital investment in health. We're trying to be the one network that examines value for money in investments in health. It includes, the objective of the work is to fill the infrastructure gap while ensuring that this infrastructure bolsters economic and social growth and contributes to equity, innovation, and inclusion. This is achieved how? Through working groups that are actively working to develop practical tools for decision makers, particularly public decision makers at national and local level, to optimize health assets design, building, financing, and operating. In other words, sweat the assets and generate additional resources. Make the best of contracting models and solutions, including complex contractual arrangements, which is a key issue in healthcare because of the asymmetry of information, such as PPPs or those tapping into private investment and project finance. Monitor and replicate innovative infrastructure projects that deliver value for money across their life cycle. So this is the Decide's greenhouse of innovative projects. So we are really encouraging everybody to, all the organizations and agencies interested in understanding better how to maximize value in the investments in the health sector and ensure that broadly investment in capital goods for health are part of the solution to fast track economic and social growth with health as a key sector of activity. Thank you very much.
Thank you. Thank you very much. Rosa, please, you have some coalitions to announce as well.
Yes, thank you very much, Sarah. Indeed, when we took the responsibility to organize this HLE, we thought from the beginning how we could make the most of it and produce tangible outcomes, since this is an extraordinary opportunity to gather a critical mass of PDBs to give continuity to the discussions we've had today. With this spirit, together with our colleagues at the AFD, we prepare a declaration of the Coalition for Social Investment. It's a declaration of intent to set up a working group of interested PDBs to increase visibility and the impact of PDBs on social investment. The working group would have two work streams. One more descriptive to map needs, financial gaps, actors, and capacity building, and other work stream more focused on action. The declaration has already received the support from ILO and WHO, and several banks and networks have already expressed their interest, such as the World Federation of DFIs, co-organizer of the FIC Summit, and the Association of African Development Financial Institutions. We are looking forward to cooperate with all of them and also with other institutions such as the OECD. I call and encourage from here all PDBs to go through the declaration, which is accessible on the FIC website, and I hope that you will find it interesting, motivating, and useful, and you will join forces with us to work for a more inclusive and resilient and sustainable recovery. Thank you.
Thank you, Rosa. As we said, the conversation absolutely continues in real life and on Twitter. There is a question coming in that I think, David, you're well placed to answer it, and be very conscious of the time we're running out. But very quickly, how would you better measure the returns on social investments? You know, the returns in terms of growth and jobs and actually reduction in carbon emissions. David, very quickly.
Yes, well, I think, first of all, the right investments that in social infrastructure will spur jobs, health outcomes, and lower carbon emissions on a local basis. All of those are susceptible to measurement locally, but there do need to be investments in appropriate data collection on a more local city level basis, particularly around jobs. The great cities measure their greenhouse gas emissions. There is considerable air quality monitoring and a new program called GEM, a partnership which can do much, much more on a local basis. The jobs data is missing. Put those data together, including health outcomes for people, and you have a reasonable proxy for how effective your social investments are. Jobs, health, environment, clean air.
Thank you very much indeed, David. So there is a way of measuring it. We just have to do it. I think we have to come to the end of this fascinating panel. I've really learned a lot. We're short of time, of course, but I think we've compacted into these less than 60 minutes, actually, some very, very important messages going forward. And I think three things, really. One is that we have learned lessons. I mean, the lessons have been hard, harsh, and very, very difficult to bear, but lessons have been learned. Now, the important issue really is how do we implement what we've learned? And that is the need to increase social investments, the need for finance for investments, and also the need to work at the local level. And this has been highlighted by all four of you, and I think that really is the way forward. Now, coming to the end, I can just tell you that we have a technical briefing, as Rosa mentioned as well, from the Council of Europe Development Bank, which has been published 2 days ago, and it's on the website. You can also download Establishing a City Green Bank that's been launched by C40. And of course, as I said earlier, you can follow all of this and more on our social coalition and on the social media. It's now time to say bye-bye, time to say thank you to the panelists, time to say thank you to Rosa Maria, to Agnes, to Lamia, and of course to David. Thank you very much indeed also for all of you for watching. I think we've learned some very important and I think very, very instructive lessons going forward. We wish you all a very happy recovery and a very happy life. Stay safe, stay healthy. Goodbye.
Bye.